So wonderful morning, friends. Hope all of you doing fine. Let's quickly take a look at a couple of important provisions from professional ethics, of which questions have been picked up regularly, so that it'll be very handy for you. Do check it out. Do make full use of it. So first one is restriction on fees. No CA shall charge or offer to charge, accept or offer to accept in respect of any professional work fees which are based on percentage of profits or which are contingent upon the findings of result of such work, provided in the case of receiver or liquidator the fees may be based on percentage of realization or disbursement of assets. In case of audit of cooperative society, the fee may be based on the percentage of paid up capital working capital, and in the case of valuer for the purpose of direct taxes and duties, these are minute areas specifically they're given for the purpose of direct taxes and the duties. So watch out, instead of direct tax they might give something else, so don't get confused. In that case it will be considered misconduct for the percentage of property valued. And in case of certain management consulting services, and in case of certain fundraising services, and in case of debt recovery services, and in the case of services relating to cost optimization, the fees may be based on the percentage of profit derived. And any other services, the catch here, any other services, so what are those services are acting as insolvency professional and non-assurance services relating to non-audit clients. So these are the various cases under which CA is allowed to charge. I repeat, the cases are liquidator, cooperative society, direct tax, management consulting services, fundraising services, debt recovery services, and cost optimization services. So ensure you, this is with regarding to the clause 10 of part 1 of a schedule. And another important clause of which questions have been tested frequently is clause 10 of part 1 of second schedule. So member may be entrusted, that is, as soon as you receive the money you should deposit it in a separate bank account, but the exceptions where an advance received by CA against services to be rendered does not fall under this clause 10. So this was a specific question which was asked in September 25. So what are the other things you should focus upon is monies received for expense to be incurred, for example statutory fees, purchase stamp duty, etc., which are intended to be spent within reasonable time. In that case they need not be put in separate bank account. Very important. So the expression reasonably short time, that is very important. Sometimes they might give all these things but give reasonably longer period of time. So these are the catch you should not miss. That is a specific reason why these things are being shared. And money you receive for expenses to be incurred which is not intended to be spent, they should be this. So clause 2, this is that is the second point, and third point should be read together simultaneously and parallelly. And last one, money received by a CA in his capacity as trustee, executive liquidator, etc., must be put in a separate bank account immediately. In the previous, this is how you should connect. In the previous clause, in the case of receiver or a liquidator, the fee may be based. So in that case, the exemption was given for the liquidator. But in this case, money received by a CA in his capacity as trustee, executor, liquidator must be put in a separate bank account immediately. Beyond these things, there is very less chance of anything else to be tested in these clauses. So do listen carefully, do make full use of it, and go through this video at least 2 more times. All the best, keep going, best wishes, and stay focused.